Hey guys, I hope I am audible properly. Otherwise, I have to shoot again. So the thing is, I will do a journal entry and account statement preparation task in this video. But it is a longer task, so I might not be able to do everything at once. So it will be the video will be in parts. Okay. So in this video, I will do the journal entry, and then the part 2, I will prepare the statement based on those entries. So what we have to do, let's go through it. First of all, we have been given a demo company which is called Saldi, if I pronounce it correctly, SALDI. So there are a bunch of transactions we have been given around 15. Then we have some historical data. So these transactions are supposed to, I mean, happened in 2015. Okay, there is somewhere it is written. Yeah, it's 2015 this transaction occurred. Then we have historical balance sheet of 2014 as written, plus the historical PNL as well we have written here. Cool. These are the data we have, and for 2015 we have to create the debit and credit. After that we have to prepare T account, and in this case the T accounts has been already given. This is for balance sheet T account, and if we move a little ahead, so these are for PNLT account, so which makes another things that we cannot create any account from ourselves. So whatever the account we have been already given, we will utilize these only. We will not create any additional account from our end. Cool. After doing that, we have to create a PNL statement based on those record, plus as well as a balance sheet with some KPIs. KPIs means here we have to calculate some financial ratios, like for balance sheet, for example, DIO, DPO, day inventory, payables, then those things, DSO. So before starting, what I'm thinking that just because we have limited with the transaction, I mean not transaction, limited with the accounts, right? So it would be nice to prepare a list, like whatever the transaction, I mean account we can use, so that once I can get a list, no, so then I can easily do the debit and credits. Here we have to do the debit and credit. So what happened, I will put the transaction number, and when we have to put the account name, I can use that drop down list by creating a data validation here. So it will be much easier, and I will not mistakenly misspell anything or create anything, although there are few lists, but that would be very handy to do that. Okay, so give me a minute, and I will quickly resume the video. Okay, so I think I am audible right now. So what I have done in the meantime is nothing, that these are the T accounts and the limited accounts we have, right? Like fixed assets, inventory here, employee payables, and some for PNL as well. So I have created here some are these account, DNA, provisions, whatever. So I have created a new sheet which is called helping sheet, and I have just make the list. For balance sheet, we can only use this line item, account name, ledger, whatever you called. Let me zoom it a little bit. So these are the things I have created, and for PNL these are the list. So we can only use this list only in the debit and credits or a day book, whatever you called it, right? Or in the journal entry. So let's start doing the journal entries. Let me zoom it, and first of all, I have to assign the data validation here, so that I can use those the list only. So I don't know how long it will goes, but let to be a safe side, like 40 rows. Cool, 40 rows would be enough. Then I have to go to the data tab, yeah, here, and from there I will get the data validation. Yeah, I got it. And here we need a list. Our list source is, so this is the part for balance sheet, right? Here it is wrong. So I will take the balance sheet data entries only, I mean entries list only. So these are the list for balance sheet, and hit OK. So yeah, now if I click here, I will get the list here. That's goes for balance sheet, and I have to do the same for PNL or income statement as well. So I will taking around 24 rows would be nice. I hope it will not touch here. This is the check for debit and credits that in the accounting everyone knows that the debit and credit must be balanced, right? So yeah, this is the check with that will done that. So I will click the data tab, and here data validation, again I will go with the list. The source list is in my helping sheet, and yeah, these are the entries we can only use. So yeah, that much is fixed. Now I can go with the entries one by one. Let's see what is the transaction I1 is saying. So where is my transaction list? Here. So let me drag it a little bit so that I can easily move around, right? So yeah, I think that is fine, but it would be much better if I go two windows side by side so that it will be easy for me to see. What should be I do? But I'm confused that if I make it side by side, whether it reduce the quality or you might not able to see the text. That's I'm thinking. So let it be for now. Okay, let's see the transactions. I maybe might change it. Okay, bye. Let's put it this way. Yeah. So what is the first transaction said? A company called Saldi issued an additional 10,000. Oh no, it's not 10. It's a 10 million. My bad. 10 million shares of a $3. Okay, so per share is for $3 common stock. Its equity amount to $90 million prior to the transactions. Okay, I got it. If we check the balance sheet as well for the 2014 balance sheet, our equity is this company equity is a $90 million as per the 2014. So that's right. So now the equity has been increased, so because we have raised some shares, right? So the cash will increase and equity will be increased. So yeah, so it's a balance sheet transaction only. One, cash will be debited, so cash, right? How much? It's saying that 10 million of shares, so 10 million and then 3 million each. 10, 1 2 3 1 2 3, this is the 10 million, then multiply with the 3. Sorry, why it didn't work? Let me see. Okay, sorry, this is a very stupid thing to do, that without putting equals to. We can put equals to and plus as well, whatever. So yeah, now it should work. And if you think that why the number format is looking like this, like maybe it's came with that sheet only, I don't know. And another thing, the thousand separator, if you have noticed that I'm getting in million, so there's another reason for it. Like I have changed my regional location is in US only, because I know those are the transactions are in millions, and the thousand separator are look like this, and I'm from India, so it might look different. So I have changed it in my from my location. So I've changed the region by the setting. Okay, so that's why it's looking like this. So in your case, if I don't know, like if you try it by yourself as well, and if you are thinking that why it's not looking like that, so you can change the region from the setting, not Excel setting, from the your system settings, obviously. So I have debit the cash, and then I have to increase the equity as well. So here is our equity, and equals to, yeah, 30 million. $30 million, right? Let me check the transaction. It's a 10, right, $30 million. I'm a little bit confused with these zeros. There are very long numbers, right? Okay, so then what is the next transaction is saying? uh, it acquired fixed asset for 80 million and paid with cash. The assets have an estimated salvage value of $5 million and an estimated useful life of 15 years. Okay, so I guess salvage value I have given, asset value, fixed asset value is given 15 years. So I guess we have to calculate the depreciation here as well. Okay, for this asset which we will gonna purchase. Plus, at the beginning of the year, the company had a total of $150 million in fixed asset. Obviously, we are historical balance sheet has been given, and if you check In fixed asset, so yeah, there are some fixed asset from the past as well, which is around 150 million dollar, right? So if you go the transaction, fixed asset, and which depreciated at a rate of 10% annually. Cool. So this is a longer process. I mean, we have to do so many things in this. First of all, let's purchase the asset first. Okay, record the asset purchase, $80 million. Okay. So okay, I haven't put the number here. My bad. So now this is the transaction 2, and which is for fixed asset, where it is, yeah, in the first row, and it will be $80 million. 80, 1 2 3 1 2 3. Yeah, zeros are right, and the cash will be credited, reduced. Okay, the same amount. So that much process is done. This is the asset purchase is done, but as it said that we have to calculate the depreciation as well, right? So we have to record that as well. Let's go in the helping column and record those data first. Okay, whatever we have been given. Okay, so let's see. Fixed asset we have been given, I know. Then we have salvage value. Salvage, I'm writing it short. Okay, salvage value, and then we have what, useful life. Yeah, useful life. That much data we have been given, right? So fixed asset to be just recorded 80 million dollar. Okay, don't worry, it's just not taking the row. Yeah, so it's not looking the way it should be. So let's just copy it, the formattion, format where it is. Yeah, debit. Yeah. Simply copy every column, my bad, and Control Alt V. We have to change the I mean, change the formatting only. Yeah. Okay, the formatting has been done, but why it's in the left side? It's supposed to be right side only. Number format, but it's showing left side. Yeah, now it's look good, clean. So these are the things. $80 million, and salvage value. How much? The salvage value is I forgot, 5 million, I guess, right? Yeah, $5 million of salvage value. Again, 5 1 2 3 1 2 3 5 million. Not looking the same. Cool. It should be copy. Control Alt V. Enter. Cool. The useful life is 15. Let's see. Transactions. The yeah, useful life is 15 years. Okay. So if we go with the SLM method, we can know how much depreciation we have to charge here, right? So let's do that calculation. Depreciation for this asset only. Okay, for the another asset, or whatever will be left, we will check on that. Okay, so equals to okay, let me cut first bracket this minus this. Okay, then divided by, this is the depreciation for this asset. Okay, which we have to charge obviously, but now we have to calculate depreciation for old fixed asset. Old fixed asset, which is 150, then 123 123, that much. Again the numbers formatting. Come on, I hope you guys can see it, right? Cool. So let me change the formatting here. Control C, Control Alt V, T, enter. Yeah, nice, look good. Old fixed asset, and rate, the dep rate I'm calling it, and which is 10%. Let me reach it. Yeah, 10% annually. Cool. So this is the dep rate. So our depreciation will be for this. Oh, I can copy paste also. Yeah, sorry. Okay, so this will multiply with, okay, this is the other part of the depreciation for this fixed asset. Okay, now we have to calculate the total depreciation. Cool, equals to this plus this. Cool. It's not looking that a format, so I have to change that as well. Okay, copy. Cool. There are some rows missing. What happened? I just created this sheet. Okay, whatever. So it's that much is we sure that we have to depreciation, charge the depreciation $20 million, right? So let's make the transaction, I mean entry for that as well. So first of all, again the entry to once again for depreciation, we have to use account name for accumulated depreciation or something like that. But just because we don't have the free hand to do those things, we have to only use this. And here depreciation I will use with the fixed asset, just reduce its value only. Yeah, because there are no other transaction or any entry account that you can use in place of that, right? So only fixed asset we can use, and the asset value will be decreases, so it will be credited obviously. So I will just simply equals to and take value from there only, so that uh, anyone like can remember that where the value came from, right? So yeah, that would be nice. Fixed asset is here, and depreciation is something from something related to income statement, so that we have to record here only the same transaction ID. Then dep, where is the depreciation? Yeah, DNA, depreciation and amortization, and it's an expense obviously. Equals to, I'm using equals to because if any calculation miscalculation if I made, so that one changes can reflect to other places as well, so that I don't have to do anything manually. If I did a little bit struggle in the beginning, then that will be helpful for the later time, right? These are the things that help a lot on the later. So yeah, as of now we have only came up with only two second transaction. I don't know how long this video will be gone, but yeah, be patient with me, and if you're watching it, yeah, let's see how things I can do. If I got stuck here or make any mistakes, so please pardon me, because I'm still learning phase. Okay, so these are the practice sheet given from the course which I am pursuing right now on the online course. From there it has been given, so that I'm doing right now. So okay, so too many talks. What is the third transaction is saying? Throughout the year, Saldi accrued salaries of $12,500,000, obviously, and paid salaries of $10 million. Okay, salary. The cash movement will done for sure, and we have to debit the salary first. So this is the third transaction. Cool. For third transaction, salary, we don't have any salary account, but we have cost of service and personal. So which is reflecting here? Let me see. The company accrued paid final external service. So for service it has something else, right? So that will gone for the service expense. So for this, for the salary, like there are no salary payables or salary expense are in the list. I have to use this only, the cost of personal. Yeah, that must be the salary. Talking about salary, and it's supposed to be same. How much it's saying? Transaction. The short of salary, accrued salaries of, okay, 12,500,000. 12,500,000. Yeah. So there are two things will happen. Yeah, first of all, some cash movement will happen, and we have to record some our liability as well, the salary payable. So first record the cash. Cash will be credited, which decrease how much we have paid. $10 million, right? Out of 12 million, they have paid $10 million cash has been paid. Paid salary of this. Okay, yeah. So $10 million. 10, 1, 2, 3, 1, 2, 3. This is a longer number, so yeah, I mean, to check that I'm not missing any zeros or adding extra zero, that every time I'm putting, I will count it. Yeah. So this is for myself only. Okay. What else we have? Yeah, I know we have a salary payables, I think. Yeah. Trade payables, no. Employee payables, yeah. This one we have to use. Now how much I will not manually calculate, everything will be done here. So obviously that's much we have a total salary. If you minus this, that much we have paid, so obviously that much is our payables. So it's showing in the left side in the rows, as I'm seeing. That's not nice. Let me make it right side. 40 rows, right? I have taken, yeah, so 40 rows, and make it right hand side. Numbers should always be on right side, but what is the issue? Why it's not working like that? Maybe some issue with the sheet, I don't know. Okay, now it's fine looking. So yeah, transaction 3 has been done as till now. Man, it's so many things to do. Okay. And what about the transaction 1? The company accrued and paid, oh thank god, they have paid $5,500,000 external services. So yeah, cash movement, this is for transaction 4. Yeah, go, and services, not cash, sorry. 500, then 1, 2, 3, 5, 500, 5 triple 0, 5, 500, 000. Yeah, and this is for transaction 4. Again I have record the expense. This is for cost of service. Cost will be debited, equals to, yeah, I should have write there also, I mean only first, whatever, it's the same number. Yeah, so that much cash have been moved. Now let's go with the fifth transaction. I hope Saldi's revenue in 15 were equal to 524. That oh, very long number. It's a 524,449,000 dollar. Okay, all clients paid their invoices except for 15,485,000 dollar, which were registered as account receivables. Okay, so total revenue is that much is for sure. That much will be represented. The balance we have gone as cash. We received as cash. My bad. Yeah. So let's record the revenue first. So this is our fifth transaction. Yep. And we have to record the revenue. Why it's not working? R tab. Okay. Now revenue will go here. The number is a bit tricky. Let me recheck it. Okay. It's a very long number. 524, then 449. 524, 924, then 449. 524, then a 449, and 230. Yeah, that's the number. That much revenue has been recorded, and now some are we have received cash, and some are in like account receivables. So cash will increase, and that will go obviously in debit side. Okay, right? The transaction number is the fifth. Yeah, first cash, and let not first cash. Okay, my bad. First make it account receivable. Why? I will tell you. Account receivable, because they have mentioned the account receivable first. Account receivables, yeah, that was where registered as account receivable. It's a 15,485, then 000. 15,485, 000. 15,485, 123, 000. 15,485, 000. Yeah, that much is as a account receivable. That also our asset, right? So it will be debited, obviously. Cash and equals to, so our revenue will like this. Yeah, that was our revenue, right? Minus this much is the account receivable. So obviously this is the cash we have received, and up until now are we in balance? Yeah, we are still in balance. Okay, this thing I haven't created it. It has come with the sheet only, the practice sheet only. They are just prepare the all the debit side and credit side, so that it will be balanced, and I can check it side by side as well. So that's a handy thing to have. So yeah, that much is done, and let's see the sixth transaction then. Sixth transaction in 2015, Saldi purchased raw material for $240 million, paid for $230 million of them, and registered the rest in a trade payables. Okay. So first of all, inventory has been increased, raw material that much, and paid that much. Baki ka we will check. Okay. And this is sixth transaction. There are six thing will be included, because inventory will used, cash will used, and account payable will use. So yeah, sixth account will be affected. So first of all, inventory. Yeah, inventory will be debited as well. So let's see where it is. Inventory debited. Inventory debited. Where it goes? Six. Yeah. So $240 million and 230 paid as cash. Okay, 240 million. So that is 240. 123. 123. $240 million is for inventory. Cash has been paid 230. 30, 123, 123. See? Yeah, zeros are all fine with the commas. And the rest will be account payable. You have to pay. So, see? Trade payable is showing the same thing. So, how will we calculate that? Trade payable is a liability. So, liability increases, right? So, it will obviously go in the credit side. DEALER. LER. So, yeah. L. So, it will be credited, obviously. So, equals to this minus this. Yeah. $10 million. Are we still in the balance? Yeah, we are still in the balance. Yeah. Now go with the transaction 7 then. The company spent $32 million for 32,450,000 dollar. Okay, 32,450,000. Reading the numbers is a bit much difficult. Like I used to learn read numbers in Indian style, but yeah, whatever. The company used that much money for other direct cost used to create its product, and paid for this cost during the years. So they have paid, right? And the cash movement will be done, and it is an expense, and which is showing other direct cost. So that's the something other direct cost, operating expenses, like that. Cool. So transaction 7, obviously. First I record here only. Okay. So which account we can use here? Let's see. Cost of goods sold, no. Service personal, no. Utility expense, no. Interest expense, no. Yeah, other OPEX, yeah. It's not revenue. Other expense will calculate how much. Let me see it once again. It is transaction 7. Here it is. 32,450,000. 32,450,000. So 32,450,000. 1, 2, 3. 32,450,000. Just to check again. Yeah, I don't want to mess with the number. So even if we're taking a little second extra, it's nice to recheck with the numbers. So cash will be credited, decrease obviously. Yeah, 7 transaction has been done. Man, we have come so far. Let's go. Transaction 7 has been done and 15 are there. Okay, halfway we have come. So Saldi had a supplies worth 34 million at the end of the year. The rest of the raw material were used for the production of goods that were sold. Saldi had a supplies worth that at the end of the year. Supplies one and the rest of the raw material were used for the production of a good that were sold. Okay. So that mean what it is saying that $34 million of worth of raw material or inventory will remain less, remain, okay, at the end of the year. That is our ending inventory. It has been given, or other than whatever we have inventory we had, that much we have sold. But there is a tricky thing happened here. What is that? That in the debit and credits we have bought some inventory, right? Here this is much inventory we have bought, but we cannot simply just minus with this only, like this value minus that value, and then we simply got our inventory whatever we have been sold. Or you may say that is the same is as cogs, right? The cost of goods sold, that's the same thing. We cannot simply say that, because we have been provided the historical balance sheet as well, and in the historical balance sheet there are some raw material as well. So we have to think like that also, that that much has been also used, and the value which has been given here, that much is only remaining. Where it is, yeah, here the salary had supplied, that much was the remaining. Before that, whatever the inventory were, it has been sold completely. So it's a tricky question basically. So yeah, we will check on that. First of all, check with the old inventory, okay, or beginning inventory we can call it. Yeah, then we have purchase. In this year, whatever the inventory we have purchased, and ending inventory, that also we have been given. So let's put the value one by one, and yeah, see. Yeah. So our beginning inventory, historical balance. The beginning inventory was the raw material. That let me copy it, and yeah, this is our beginning inventory. I hope the number just cool. Why it's giving this format? Okay. I got it. Why it's happening like this? That's why there's those rows are looking awkward. Why? Because I have copy paste it from there, and here what happened, there are no the row lines. It has been all colored with white only. That's the main reason. Yeah, see, have you noticed that some there are borders are looking weird? Yeah, there are no border. That's why. Okay, so let's make it beautiful look. So we will remove the border from here also. Okay, let me check. Control A, and yeah, now it's all look the same. That much we will won't touch. This is something separate, right? Yeah, okay, whatever. No waste of the time with the formatting, please. Yeah, so this is done with that. And purchase, the purchase value we have, yes, in our debit and credits, the inventory, yeah, this is our purchase, right? Purchase has been done, and ending inventory, it has been mentioned in the debit and credit. Oh no, equals to, it has been simply mentioned here where it is in the transaction, how much ending inventory. It's saying in the transaction A that 34 million worth of inventory was remaining, right? And the ending inventory, $34 million. Okay, I can share it. 34 123 $123 million. No, it's not the same. Copy, Alt V, T, enter. That's good. So now we can calculate our cost of goods sold. COGS. How? So this was our beginning inventory, right? Then we have done our purchase, and then we have to subtract with our ending inventory. So this is our cost of goods sold. See, So that was a tricky question then. And now just record the debits and credits. So once again, we have to reduce the inventory balance here. There are no any other account to use for. So simply that 7, that was the 8 transaction. Yes, am I right? So here as well and here as well. Now how should I record it? Like simply record like that only. Cost of goods sold has been given, right? Yeah. It has been it is expense limited. I should give the value from there so that I can show that how that number came from, right? So I must take number from there only. This is the nice and inventory. What are the inventory has been used? So I can simply say inventory. It will obviously decrease the value. Yeah, number is still balanced. Yep. Okay, so transaction 8 has been done. So let's see transaction 9. Sally received a rental payment of $2 million. This activity is not part of her core business or of its core business. Where I'm saying her. Why I'm saying her? Okay, bad English. Cash movement. Obviously, I received the cash. $2 million. 2, 1, 2, 3, 1, 2, 3. Not 20. Obviously, 2 million. Huh? $20 million in the rent. No way. Where it is? Yeah, $2 million in the rent. Yeah, right. Cash and that will our goes with the rental income. Oh, I supposed to write it here first because rental income is the main thing. Okay, whatever. So rental income is not for the revenue. I cannot use the revenue. I can use other revenue. Yeah, which has been got equals to this end. Damn, this video is already getting too long, man. I have to edit it as well. Okay. So yeah, transaction 9 has been done. Now let's see what is in transaction 10. Okay, yeah. Transaction 10. The company accrued and paid $35 million for logistics. Yeah, accrued and paid as well. So cash movement. So let me record the first the logistic expense. This is for a transaction 10. Yep. Logistics. Yeah, we have logistics and it's an expense. How much? Once again, why I have so short memory, man? I just see the number $35 million. $35 million. 35. 1, 2, 3. 1, 2, 3. I don't want to take a risk with the numbers. Okay, I don't want to put any wrong information. That's the main another thing. So cash and it's supposed to a okay, this is an expense. There is no income happens. Why am I recording in the debit side? Not sure. Yeah. Okay, 10 transaction has been done. I'm coming so far. The company accrued a $10 million and paid a 9,500,000 for utilities. Okay, cool. So let's record the utility first. For 11 utility. Yes. How much? Once again, sorry. Yeah. Sorry. So $10 million and 9,500,000 will be paid and remaining will be the in the payables. Yeah. I will not come again. 10 million. So 1, 2, 3. 1, 2, 3. This is our utility expenses which has been registered. Now came with the cash that how much we have paid. First the number and some payables will be there. So two entries are there. Cash. Obviously cash how much? As it's saying that $9,500,000. Yeah, numbers are correct and remaining will be in the payables. Utility payables. I hope we have the list. I mean the account for that. Utility payables, account receivables, inventory, cash, employee payables. We have trade payables, provision. No, it's not go with the provision. Okay, so it's will use the other liability section because there are no other account that I can use like utility payables or something like that. So I have to use that only the other liabilities. Yeah. No, I will not put the value manually, obviously. So this is equals to this. Sorry, this number then minus this. Yeah, that much is our other liability. Okay, I think I have made a mistake somewhere. Let me see. Why is this number is showing like this? Let me see. Just give me a minute. Okay, I will pause the video. Oh, I'm so stupid. I'm so stupid, man. I'm seriously. In my last transaction only, no, that it should be in the credit side. The cash has been reduced and the liability. Yeah, I'm sorry. Yeah, so stupid of me. Yep. Okay, this thing happens. Yeah, don't worry. The more I will do and the more I will be a hand of it. Okay, but yeah, mistakes happens. So the 11 transaction has been happened, right? There's nothing to do. The liability side has been cash has been paid and the calculation is done, right? After doing everything, if I see that the camera has been not recorded or I haven't been there was an edit mistake in the video, then I will be disappointed as fuck. The company's outstanding loan at year end is 120 million, which has decreased from 140 million dollar at the beginning of the year. Saldi paid a 4% per annum interest rate as well. Okay, annum interest rate will refer to the initial amount of its loan. Okay, so first of all, there are so many things that happen here because we have to calculate the interest expense that for sure, and plus how much loan has been reduced. The what is the cash transaction mainly happened, that also we have to calculate, right? In the PNL or in the income statement, we only record the interest we paid, but the actual money amount is different. If you know, then you know that we pay the actual repay the loan plus the interest, right? If you know, make the EMI schedule or loan schedule or debt schedule, whatever you called, then there are four columns, one with you know the how much loan we repaid we have. So we cannot prepare the whole schedule here, but whatever the values we have, let's make things easy for us. Okay, so yeah, let me scroll down a bit, take a few cells gap, and see whatever the values we have. First of all, uh, beginning debt. This is our beginning debt, and then we have ending debt, and we have interest rate. These three values we are already being provided, so let me put it one by one. The company outstanding loan is $120 million, which has decreased from $140 million. The beginning date was $140 million and then $120 million. Okay, yeah. 140, 123, 123. Cool. Then 120, 123, 123. Then 4% interest. Two things we need to know. First, the cash movement, and second, what is the interest payment has been we have made, right? So let's do that. Yes. I use that copy paste stuff and this interchangeably. Whatever I can use that. So first of all, how much loan we have paid? Okay, that we have to check. Debt repay. Now, how much debt we have repaid equals to this minus this. So that much debt we have paid, right? Debt repaid has been done, and now to calculate the interest payment as well. Sorry, yeah. Interest paid. Okay, my typing are a little bit slow and have movement as well. I know that. So interest, obviously, if you prepare the loan schedule, you know that percentage we always multiply with the ending balance or beginning balance of the ending balance of the last year or beginning balance of the present year, whatever you called the beginning date or the ending date of the last year, right? So I have to multiply the beginning date with this interest rate so that I can got the interest paid expense. It's not an interest expense, that's all. So what is our total cash movement happened here in this transaction? This plus this is the total cash movement we have made, right? Oh, my system get hanged. I mean, it's working. Okay, yeah. Cash. Let me put the transaction number. Let me tell, what is the number of the transaction? Why I'm so dumb, man? It's 11, so obviously it will be 12 only. Yeah, 12. 12. Here, what I have to done? We have to make the cash transaction that much, the total cash transaction. Okay, I will put the equals to so that they can check that where that value came from, right? So yeah, this is our cash movement. Yeah, that much has been cash credited. Then debt. So the thing is debt we have paid, right? So debt has been reduced by how much value? That this much, so that will go on the debit side, obviously, equals to this, and second column, this is the debt repay, right? And I will have to put the cash value. This is the interest expense. You know what, it would be much better that I write interest expense here, then the debt here, and make the plus of what of that cash here. That would be nice, right? So that would be nice. Yeah. Oh, whatever, what happens, yeah. So interest expense will be came from there only. Where it is, yeah, interest paid. Is it balanced? Yeah, it's still balanced, we are in the balanced, guys. Yeah. Okay, cash movement had done, interest expense has been done. Okay, almost done. Yeah, transaction 13. Sally made a provision due to legal litigation, if I pronounce it right, with supplies regarding a shipment in May 2015. The provision is for $3 million and is expected to be paid in 2016. Okay, so this is 2015 and it will gonna paid in 2016. Within 1 year it has been gonna paid. That's a separate stuff to calculate, look for, like, but we have to record the provision first, and it is not gonna paid, right? That's only made provision dealing with the supplies regarding the shipment, and there are no cash movement. The provision is that for and expected to be paid in 2016. Yeah, so this is not a cash movement, obviously. 13 provision. Yeah, we have a provision payables. I should know that. Yeah, provision here, and it's obviously and debit side, because it's a, I mean, sorry, in the credit side, liability is increasing. Liability increasing, bro. Sorry. Okay. How much? $3 million, not 30. $3 million. 1 2 3 1 2 3. So $3 million in a provision will be in the cash. Yeah, provision is an expense. We have to show it as an expense. Just like depreciation, it's also we have to record it. Provision is an expense, right? So valid cost of provision. Yeah, provision for expense. Yeah, same number equals to this. Yeah. So this is done. The provision expense done, and now let's see with the 14th transactions. Oh, we have come too far. The company had other operating expense of $35 million at the end of the year. 5 million was still outstanding. The company had other operating expense. $35 million. 5 million was still outstanding. So still outstanding means we have some payables as well, some operating expenses. But do we have any other operating expense payable? No. We have only employee payables, state payables, province, and we have already used the debt we have used just now. So I mean, obviously, why would we use debt here? So it will be goes other liabilities only, right? So yeah, let's make the transaction 13 14. Yeah. First of all, some has been paid in cash. So let's make the expense first. It's an other OPEX, other OPEX. Yeah. Obviously, how much? Once again, let me see. Other operating expenses. $35 million of other operating. $35 million. 35. 1 2 3 1 2 3. $35 million other OPEX. And how much is in remaining payables? Let's see. Other liability. $5 million in the payables. Right. 1 2 3 1 2 3. And remaining has been paid in cash. Obviously, equals to this minus this. Yeah, our account is still in balance. So yeah, 35 and $5 million registered. Okay, what is the last transaction is saying? Saldi accrued but did not pay taxes of 15% on its earning before tax. Damn. So the problem is that I cannot record this transaction in the debit and credits, if you have guessed it. So yeah, that's the thing. For that I have to prepare the PNL first. Where is my PNL? Yeah, this PNL I have to prepare first, and when after doing every calculation, when I came across with the earning before tax part, then I can calculate that 15% tax, that how much amount has to register in the tax, right? So right now I cannot record it, and it's a long process because I have to first prepare the T accounts and those stuff I have to do, right? So I will end this video here only, and please stay tuned with me, and obviously check the next part as well. So yeah, that's all for today. Bye.